In this video, I'm going to walk through our manufacturing overhead budget as part of our master budget. So our starting point was our sales. From sales, if we're a manufacturer, that's going to drive our production. After production, then that's going to drive our three different components of manufacturing costs: direct materials, direct labor, and manufacturing overhead. We need to determine what we feel like is going to drive our overhead. In this example, they've told us that we believe that's going to be direct labor hours. Because of that, we would have needed to prepare our direct labor budget before our manufacturing overhead budget. And the good news, they've already prepared that for us. We're going to budget our overhead for the year broken down by quarter. Our overhead's going to have two major components based upon cost behavior, and that's going to be variable manufacturing overhead and fixed. They've already done some heavy lifting for us, and they predicted that the variable portion of our predetermined overhead is going to be $3.25 per direct labor. So I'm going to start out and first just list the budgeted direct labor hours for each quarter. For example, it's 8,000 for the first quarter. Multiply that 8,000 budgeted direct labor for the first quarter times $3.25 variable overhead rate gives us predicted 26,000 in total variable overhead costs for the first quarter. To that, we're going to add in total fixed manufacturing overhead that they predict to be $48,000 for any individual quarter, plus the $26,000 variable overhead gives us total budgeted overhead costs of $74,000. Now, just because that's the cost doesn't mean that that's the exact amount that we spend in cash. Beyond the cost of $74,000 for the first quarter, we also want to know what we're going to spend in cash for overhead for the first quarter, because we're eventually going to also do a cash budget and we need to know our spending. So what I think about, is there anything in cost that's not an actual cash outlay? I'm not actually spending that. Well, the one item that we identify is depreciation. If you recall, depreciation, for example, for a machine, isn't the current amount of cash that we're spending. We bought the machine in the past. We paid for the machine in the past. Depreciation is just showing the usage of that asset, just an expense, but not an actual cash outlay. So we're going to back out or subtract out any depreciation that's included as part of the cost, but isn't current cash that we're paying out. So let's subtract out that $16,000 that we predict as depreciation for each quarter. $74,000 minus the $16,000 means the actual amount we're spending for manufacturing overhead in the first quarter we predict that we're spending is going to be $58,000. Now, I also want to note that I'm giving you some check figures here. Again, I want you to work through the second, third, and fourth quarter on your own, giving you some check figures. Another item that they're asking us to do is preparing our company's predetermined overhead rate. So in the past, you should be an expert on that. In the past chapters, we've done our predetermined overhead rate. And remember, the formula for that was total estimated overhead divided by total estimated direct labor hours. And you might not have thought about that came about as part of the budgeting process. So we show more detail in here of how we would have come about with that. So in this example, the total estimated overhead cost would be the $297,625. Know that we want the cost, not the amount of dollars spent. So we want that $297,625 divided by total estimated direct labor hours, and that would add up between quarter one of 8,000, quarter two of 8,200, quarter three of 8,500, and quarter four of 7,800. That would be 32,500. If you divide that into the cost of $297,625, that would give you the company's predetermined overhead rate. Hopefully that helps you give more detail in preparing the manufacturing overhead budget.